This is section 3.4, net pay. So we've talked about gross pay already. So we've talked about how much money you actually make before taxes and such are taken out. So net pay is the amount of money an employee actually takes home. So it's the gross pay minus any deductions. A deduction is anything that decreases gross pay, so that can include taxes, insurance, union dues, etc. You can find it on a pay stub. There's usually going to be a section for deductions, and then you can see each individual deduction, how much from that paycheck, and then year-to-date deductions. So, one example of a deduction is the federal withholding taxes. So that's a tax collected in the year the income is received, and it's withheld from each paycheck. So when you go get a job, you fill out a form called a W-4. And on that form, you basically tell the government a little bit about your life and whether or not you pay more in taxes or less in taxes. So for example, if you have a child, you're going to have less deducted because you have someone else that you're paying for. So your amount of federal withholding taxes depends on the number of exemptions the employee is allowed from your W-4, the amount of the employee's earnings, and also the employee's marital status. So getting married does come with tax perks. Federal Insurance Contributions Act, or FICA, is a combination of Social Security and Medicare. It helps pay for federal programs for old age and disability benefits, Medicare, and insurance benefits to survivors. So it's a 7.65% tax rate. 6.2% is for old age survivors and disability insurance, aka Social Security, and it applies to wages up to $137,700. That's the 2020 rate. That does vary from year to year. 1.45% of that is for Medicare. For Medicare, it applies to all wages with no limits. So no matter how much money you make, it's all subject to Medicare tax. And the employee pays that 7.65%, and your employer will also match that. So the amount that you pay for FICA is the same amount that your employer pays for FICA in your honor. So Social Security, which is part of FICA, so how it works is during your working years, money is set aside from every employee's earnings and put into the Social Security fund. Social Security is available when earnings stop due to disability, retirement, or death. So it could be that you have to stop working because of a disability. You can collect Social Security from that. Once you retire, you can collect Social Security. And then if someone dies, they would have a designated person to collect Social Security on their behalf. Upon death, the money is available for dependents or survivors. So usually that goes to either a spouse or to children. So suppose in a given payroll period, a total of $85 was withheld from Susan's wages for Social Security. This means that the employer pays $170 to the government total. 85 of it is from Susan's withholding, and 85 is matched by the employer. So altogether, it's $170. So Harold earned $300 for the week in gross earnings. His deductions were $50 for federal withholding tax, $23 for FICA, $6 for insurance, and $10 for union dues. What is his net pay? So he started with $300, but we have to subtract deductions. So there was the $50, there was the $23, there was $6, and there was $10. So the total deductions would add up to 50, 60, 83, 89. So total deductions were $89. So if we take 300 minus that 89, his actual paycheck that he got put in the bank is $211. A lot of people, the first time they get a job and they get their first